You can't go anywhere. You can't open your phone. You can't look at the TV. You can't go anywhere without seeing headlines right now that are pretty scary about tariffs and trade wars. People last week, when they saw the markets dropping 5% a day, literally the thought was, well, if this keeps up, I mean, I'll have zero in a week. Highly unlikely. But again, that's the feeling that happens. I would argue, and I won't just argue, I mean, the evidence shows us this is a good time to pause, not to act. This is a good time to take a beat and say, hey, markets are a little crazy right now. Should we be acting? Should we change our investments? Often action is actually the worst decision in investments, especially a reaction. But taking a pause and just staying the course, that's often the best idea. People don't like to lose. The pain of losing is 10 times more than the feeling of winning.
Let's bring in Grant White, portfolio manager
and investment advisor.
Welcome to the Finding Your Wealth podcast. What this whole podcast is about is redefining the conversation around wealth.
The whole thing is absolutely a bit of a tire fire, in my opinion. I don't like drama, and this stock is surrounded by drama.
All right, welcome to the latest episode of the Finding Your Wealth podcast, Find Your Wealth podcast. My name is Grant White, and of course, I'm the host of this show, and so I'm happy to have you here. And this is a solo episode today because in between having guests on the show, we like to also just explore going back to some kind of the basic concepts of finding your wealth, and also doing some just sharing, especially with like things that are going on in the world. And it's an interesting time right now. I mean, at the time of recording this, it's April 10th, and markets are down. We've gone through all this tariff nonsense, and we're seeing a lot of market volatility. Yesterday was a great day, of course, but today we're looking at markets are down again, giving back some of those gains from yesterday. And so anyway, there's just a lot of volatility, and the headlines are loud, and suddenly the freedom that you thought you had feels just a little bit out of reach. But what if the biggest threat to your wealth isn't the market volatility? And what I'm going to throw at you is, I think, and this is why I want to talk about this today, is like that the actual real risk in markets or any other constraints is that the way you perceive it is the biggest challenge, and the biggest thing that's getting in the way of you feeling that life of true wealth, that life of freedom. And I think we're going through a lot of that right now. What it kind of comes down to is the say the illusion of control that we think we have. Why do we need to feel like we have full certainty over the outcomes of events in order to feel free and to feel like we can go and live life the way we dream of? When we know that actually we're never going to have full certainty over how markets or other things are going to react or act in the short term of life. And so, but we feel like those things will get in our way. And that's a very common feeling. So if you're feeling like, hey, I can't do the things I want to do because, hey, markets are bad, or the Canadian dollar is bad, I don't want to travel to the States, or you name it, then, and there's tons of stories out there like that. I mean, I've certainly I'm working with people who feel like they want to delay travel because, oh, well, again, maybe markets are down a little bit. We'd rather wait till markets are up and then we'll travel, or they've delayed in making a change in their lives, or delayed in maybe delayed moving somewhere because they thought, oh, my house would be worth more or something like that. Maybe even delayed retirement. That's a pretty common one, especially like heading into, if you have bad markets and like the people are thinking about retiring later this year. And so those types of things are completely out of your control. And again, it's the illusion of control, or the hope that we'll have control, that can provide you with freedom when things are good. But it's the same thing when things are bad, and things are not going the way you hoped anyway, not necessarily even bad, but just not the way you'd hoped. And you don't feel as free. You don't feel like you can live your life. And so this is what I wanted to kind of dive into today a little bit more, because I think there's a lot of people feeling that way right now, especially just given the market turmoil and more on like even outside of the market turmoil, because we've seen bigger downsides than this in the past. And I've seen it in my career, and we've seen it, certainly throughout history. But I think what's maybe a little bit more different this time around is the noise. I mean, there's so much headlines. There's so many big headlines right now about what's going on. And that is certainly adding to people's anxiety and stress around the current financial situation and the economic situation. And so anyway, that's what we're going to dive into today. But before I go on, I do, as I always do, I want to share where my freedom is at. And so today I'm happy to report I'm feeling like I'm an 8 out of 10. And I've been feeling like an 8 out of 10 for the last little while. But, today especially I'm an 8 out of 10, and a big reason for that is my team has done an amazing job, and we've done some great work over the last little while of me handing off certain duties, especially on a day-to-day basis within our business, and helping, giving autonomy to our team members, to my team members, and having them really take on a lot of more responsibility, but responsibility that they deserve, frankly, and that they should have. And so anyway, I'm feeling more like of an 8 because frankly, I'm having more freedom in my life to do the things I really enjoy doing. I'm getting to focus more on, building our business and thinking about the future of our business, and, what things are going to look like and how we're going to do it. And, recently we did this great exercise with a number of my core team members, and I bought everybody a copy of the book Unreasonable Hospitality by Will Guidara. Fantastic book. I strongly recommend anybody who's got a business, you should read this book. Anyway, and we had a brainstorming session around like what ideas and concepts from that book could we bring into our businesses today. And it was a great experience because the team really took that on, and there were so many great ideas that I'm looking forward to employing in our business. And I think like everybody kind of took it on their own to like took some ownership over this project, took some ownership over, their part in it, and their viewpoint on what it was and what they were reading, and how that could influence the way they work. And anyway, the long story short is, I'm very happy that all of those team members and more are taking ownership in this, and wanting to contribute more and wanting to contribute in other areas. And really that team concept of like, we win together, working for the person next to you, not just yourself, has really come through. So this is an exercise we're going to continue to do. We're going to do probably on a quarterly basis, like, sharing, like we'll pick a book and then we're going to get that, the group together and share ideas. But yeah, needless to say, I'm very happy to feel that I'm living at an 8 right now, and I still have work to do. I'm definitely pushing towards that 10, but I'm feeling very comfortable at an 8 right now. And again, it's like I've removed certain constraints that are now allowing me to flex my creative muscles and flex my, just giving me the opportunity to do more things I enjoy, and getting to go home, and even if I'm working in the evenings, like I do a lot of nights, I'm working on things that I enjoy doing. It's a totally different feeling, than the work you have to do. It's more the work that you really are passionate about wanting to do. So yeah, I'm feeling really great. But anyway, it does tie into what I want to talk to you today, which is like, again, these constraints that can get in the way of us living that life of freedom. And, there's perceived constraints and there's real constraints. I think that what's going on like today is a lot of perceived constraints, and, the difference between actual limitations. For example, like if you don't have the savings or don't have any savings, well, that's an actual constraint between you and living the life you want to. But a perceived constraint might be like, I can't travel because the markets are down. Well, was the money that you wanted to use for that trip, that big trip you wanted to do, was that tied up in the markets? And if it was, then I would argue then that's not actually that's not a constraint that should have ever existed. I mean, planning around that, like you should have different buckets for your money, like short-term buckets, which are not tied to the stock market returns, medium term, which might have some stock market related returns, but also a lot of other assets that will prevent you from feeling the full brunt of the volatility. And then there's longer term assets, which can be all geared towards stock market, but it's because you don't have the need to use that money right now. And I think that perceived constraint is coming from that long-term money, where if the long-term money has gone down in value, well, then you feel less comfortable spending some of your short-term money that you planned for. And that, in that case, that's completely that's your perception. It is not a real constraint. But that doesn't mean that what you're feeling isn't real. I mean, these are some of the most dangerous markets that I've ever experienced in my career. And they're not dangerous because I'm worried that it's going to completely fall out on the bottom. I can tell you honestly, like having gone through and worked through the financial crisis, that's given me a lot of perspective on what markets like this look like and how they're going to go. But that doesn't mean that what you're feeling, that anxiety, is not real. And I'm not trying to dismiss any of that. Don't get me wrong. What I am trying to do is try to help people to put that anxiety in its right place. And I think right now that anxiety or that fear is getting in the way of people enjoying their money and continuing to enjoy their money. it's a completely natural thing. I mean, this gets into like behavioral finance, like concepts, like loss aversion. People don't like to lose. I mean, the pain of losing is 10 times more than the feeling of winning. I don't know if that's an exact stat, but that's like the ratio was way geared more towards losing. Like you feel losses way more than you feel gains. The media amplification. I mean, you can't go anywhere. You can't open your phone. You can't look at the TV. You can't go anywhere without seeing headlines right now that are pretty scary about like tariffs and trade wars. And, even today, after like the best market returns in a single day in decades since the financial crisis, probably, the headline today was, well, Trump wanted to stave off. He was more concerned about depression. A depression? We're not talking about depression, so the headlines are just really scary. We also have recency bias, and that's something that does get in the way of us living that life of freedom as well, because again, it's a constraint that, we think that I can tell you honestly, people last week when they saw the markets dropping 5% a day, literally the thought was, well, if this keeps up, I mean, I'll have zero in a week. Well, yeah, I mean, if everything kept dropping and dropping and dropping, and that's assuming that everything's falling apart completely, highly unlikely. But again, that's the feeling that happens, in those types of moments. And so, again, it's our job as professionals to steer people in the right direction, to hold their hands through those types of things. But I also want to equip you, and part of the reason to do this podcast is to equip you with the ideas and the thoughts that, that you can also help to pull yourself through it, because that'll help you to feel, well, it'll help you sleep better at night, but it'll also help you to feel more free and feel more willing and able to live that life that you dream of living, that true wealth life. Now, part of my goal here is to also discuss, the concept of designing a life, a wealthy life in any environment, because this isn't the last market downturn that we're going to face. And on top of that, there's other things that can happen in your life that can get in the way of you feeling free. I mean, market downturns is one thing, but like there might be other perceived constraints, like, oh, well, I don't know what they might be. I think there's just lots of things can get in the way of your own feeling about, well, it could be politics. I mean, look at political situation right now. Maybe you were dreaming of doing that big Disney trip with your family, but just don't really want to go down to the US right now with a trade war going on, and maybe they're not feeling good about Canadians, or maybe we're not feeling good about Americans, and yada yada yada. I mean, there's a whole bunch of ideas in there, but are you really going to let that idea get in the way of you living that life of freedom? Maybe you are. Maybe it's more important for you to show that like elbows up, true Canadian spirit, and we're not going to support America anyway. Hey, I get that. My point is, though, is like maybe there's other constraints that are getting in the way of you living that life you truly dream of. And we often chase wealth outcomes. So I want to talk about like wealth habits versus wealth outcomes. So we often chase wealth outcomes, and like, whether that's a number, a big house, an income level, and as if then like once you achieve those, you're going to feel free. Like once you achieve this income level, oh, I'll be free when I get there. Or if I get my savings to this level, then I'll feel free. But freedom doesn't start there, actually. And we know this. I mean, I think if you're honest with yourself, you would know this too. We know that doesn't start there. It starts with wealth habits. It starts with the daily and often invisible practices that shape a life of intention and possibility, no matter what's happening out there in the market or the economy or the politics or you name it. It's the habits that can get us there. So, some of those habits might be being intentional with money decisions, being more intentional about how your money is being attributed on a monthly, daily, whatever basis. Investing regularly if you're in the accumulation phase, or spending at a certain level to knowing what the level is that you can spend on a monthly basis, and not going beyond that and infringing on that freedom. Saying yes to experiences that align with your values. Doing things that make you feel good as a person, feel good for living a full life. Practicing gratitude is important, generosity, contentment, giving and being gracious. And we've had guests on the show, and if you've been listening, you've known this already, but community is often a big part of it. And giving back to the community, especially in times like this when there is uncertainty out there for a lot of people. Having regular money conversations with your partner, your spouse, or your advisor, and knowing when to pause and when to act. I would argue, and I won't just argue, I mean, the evidence shows us this is a good time to pause, not to act. This is a good time to take a beat and say, hey, markets are a little crazy right now. Should we be acting? Should we be changing our investments? often action is actually the worst decision in investments, especially a reaction. But taking a pause and just staying the course, that's often the best idea. And and again, the evidence will show us that. So again, practicing wealthy habits and less about wealthy outcomes will help you, and reiterating them at a time like this will help you to continue to live that life of freedom if you're there and not going back into that life of constraints, or it'll help you to get to that life of, true wealth at the time, and hopefully at the time when you plan on being there. So anyway, I think that's a big thing that I wanted to talk about today, was just, again, those perceived constraints versus the real constraints. Real constraints need to be worked on. If you have real constraints, like, again, you don't have enough savings, or you're not saving enough on a regular basis, or whatever it happens to be, those are really real constraints, and those need to be planned for and worked on. But perceived constraints like fear because of markets, or fear because of news headlines, those are things that are getting in the way. And they're real because they're real to you, but those are things that are getting in the way of you living that life you dream of. And there's other things you maybe want to practice. Like, I've even found myself watching the markets more closely in the last week than I normally do. Why? Because they're kind of been all over the place. Again, the top to bottom is nothing that we haven't seen before, and we've seen worse. But the fact that they're moving so much, I find myself just checking on a regular basis. And I've already felt that building up my own anxiety. So I'm going to actually slow down my checking of this, because it doesn't actually add any value. It doesn't add value to my clients or the people I work with or my team. By me checking on a regular basis, all it is doing is just fueling some sort of anxiety in me, like, oh, up or down, like, what do I got to, like, what is it going to be today? And I'd encourage you as, like, to somewhat turn off. I mean, you want to be informed and you want to know what's going on. I'm an advocate of that. But you don't want to do it to the point where it's actually like giving you paralysis over living the life that you want, and what you want to do. But freedom is a daily practice, and you want to practice things that, give you the financial freedom regardless of market swings. So, I go back to that idea of bucketing, and this is something that we practice all the time with our clients, especially the ones that are reliant on their portfolio now for income and so on. So bucketing is a concept that we love. This is where you have your short-term needs. They're set aside in short-term. If it's invested, it's short-term assets that are probably guaranteed. You've got medium-term, where it's like you have some market volatility related, but it's very measured, and that's money that's more like 3 to 5 years that you need, 3 to 7 years maybe, depending on what your goals are. And then you've got your long-term money, which is 7 years and longer. And if planning is done right, that short-term money is safe, it's good to go, it's ready to go for you for the next maybe 1, 2, 3 years, depending on, again, your own situation. The medium-term money might be down a little bit right now, but it's not down too much. Markets are down bigger. And so, that will recover fairly quickly once markets turn, and they do turn. They will turn around. And then the other side would be the long-term money. And the long-term money, yes, I know it's down more. And if it's invested in the stock market, because that's where you're comfortable, you're comfortable with that level of volatility for longer-term growth, because it's also meant to fight off other risks like inflation, for example. That money is down right now. And can you put that money in its place, which is, hey, I didn't need this money for a long time. I don't need it for at least the next 7 years. And so we got lots of time to recover in this money. I'm not worried about it. It's going to recover because we know that's how markets work. And I need to stay invested. More importantly than anything, I need to stay the course in my portfolio, because frankly, that's the only way that we know that gives you the highest probability of success. And so you need to stay the course. This is my cautionary tale right now, because, again, these are the most dangerous markets that I've seen in a while. These markets are really, really good at scaring people out. I know there's a lot of people that missed out on that great rally yesterday. And yeah, some of it came back today. But we know that if you miss just the 15 best days in the market over a course of like 30 plus years, just 15 days in 33 years, going back to 1993 or 1990 right now, if you miss those 15 best days, your returns are cut down by like nearly 40% overall. 15 days. So if you missed the day like yesterday, which was the best day we've seen in a long time, because you went to cash last week or earlier on in the week, you might have just impacted your portfolio returns for the next 10 years or longer. And so that's why, again, you got to stay in the market. You got to stay consistent. It's not to say you can't take action, because if you're holding a bad asset or something like that, you need to be allocated appropriately for your comfort levels. But staying invested and staying disciplined to your investment will help you to outperform. It'll help you more than that. More importantly than that, I should say, it'll help to make sure that you're okay. Because I think that the question that a lot of people are really asking right now is not, hey, what are the markets doing? What's that going to mean for me? It's the question is, am I going to be okay? Or hopefully, am I going to be better than okay? Am I still going to be able to live this life that I dream of? And that's where having a really disciplined approach, and you might need an accountability coach like an advisor to help you through that. That's great. But that's where staying, again, focused on the goals that you had. And if nothing's changed with the goals that you had before, and your plan is still in place and you're sticking to your plan, then there's no reason to make any major changes to what you're doing. So anyway, that's my cautionary tale, because I really do think that these markets are dangerous, but not for the reason that the media or that a lot of people on TikTok and Instagram are going to tell you about. These markets are dangerous because they're really good at making people make bad decisions around their money. And I'm seeing that. I'm thankfully I'm not seeing that a lot in my clients, but I am seeing that a lot in the public space and the questions that I'm getting from the general public. And so anyway, that's my cautionary tale. But getting back to, practicing what you should be doing to live a truly wealthy life as a daily practice. Again, having those good money habits, having those good habits about conversations with people. If you're feeling concerned, perfectly normal thing. Have a conversation with your advisor, have a conversation with your spouse, your partner, talk about what you're feeling, talk about what that means for you, talk about the fact that, hey, we've got a plan, reinforce that plan to each other so that you can continue living the life that you dream of. And I'll tell you, because the saddest thing I ever see is when people delay their plans, they delay the thing that they dream of doing, because this thing that's this perceived constraint that's like cropped up in the media, cropped up in the markets, is getting in the way of them truly living. And the really sad ones are the ones that don't get to go back and do the thing that they dreamt of doing. The pandemic did that for a lot of people. Pandemic got in the way. Again, that was a real constraint for a lot of people. It got in the way of people living. And that's why we've seen so much people trying to live more following it. Health can get in the way. Because again, I'll tell you a quick story. Like my dad had a hernia surgery last year. He had a hernia, and that put his favorite things basically on hold. My dad loves to travel. My dad loves to go to the gym. My dad loves to play with his grandkids. Those three things were basically put on hold. And because of wait times for surgeries, that was going to be potentially put on hold. If he was waiting on the wait times here in Manitoba, he was potentially on hold for, I think, about 2 years, he said. He opted to go a different route and got the surgery done in Calgary, in a clinic there, in a surgical clinic there that he could get into. And, he was able to afford to do that and get back his life, get back to living the life that he dreams of. And he just got back from a trip to Antarctica, which, again, trips like that might not have been possible had he not been able to get the surgery done. Well, I know they wouldn't have been possible if he wasn't able to get the surgery done, but he might not be able to do it in this time frame had he not got that surgery done the way he did. So again, very fortunate that he was able to go get that done. But you don't know what's going to happen. I mean, like, a lot of people talk about like death getting in the way of you living the life, but it could be a health constraint. It could be a pandemic constraint. It could be, you name it. Life doesn't wait for you. Life's not going to wait for you to make it happen. You got to go make it happen yourself. And so if you can't control these perceived constraints that happen out there, or if you can't put them in the right place and that gets in the way of you living your life, then that's just a really sad thing. So anyway, that's why I'm having the conversation today, because I'm with you. I feel these perceived constraints too. The only difference between me and you in this is I've been through them before from my side of the table, which is the advisory side. So I have maybe a little bit more background, a little bit more experience in this, a little bit better understanding perhaps of the history of markets and what markets do. I will tell you that the markets always react the same. The reasons for these things to happen, that changes. And again, everybody's going to tell you this is an unprecedented event and yada, yada, yada. Always unprecedented, always an unprecedented event. The markets tend to react the exact same way. Not always in the same time frames, of course, but they tend to react the same way. And that's why I'm very confident saying that we're going to see market recoveries probably pretty quickly at some point here. And you do not want to miss out on that. And so we know markets will recover. We know markets will continue to go higher in the future. And if we know those things, then let's put this perceived constraint of what the market is doing in its right place. I'm not saying put it out of your mind. That's a really hard thing to do, but I'm saying put it in its right place and keep living life the way you dream of. And if you've planned for this well, then there's nothing that's going on today that should get in the way of you doing what you want to do. All right. That's my so-called rant for the day. Thanks so much for joining us. If you haven't already, the greatest compliment you can give is please subscribe to this. Please subscribe. We're going to be having more great guests coming up. We've got some amazing guests and episodes being released in the next few weeks. And so please hit subscribe. You do not want to miss the conversations we're having in the next little while. So thank you so much. Have a great day, everybody. And again, put these constraints in the right place. Keep living, keep getting out there, and keep doing it. All right, take care.